All right. Good afternoon. I guess it is. It's 12:01 right now. Good afternoon to everybody. I'm glad you guys could be here um, with us. Will, I think, are you going to do a roll call?
Yes, Mr. Chairman. Get started on that now. So we'll start with committee members who have registered for the call. California Assemblyman Tim Grayson. Connecticut Representative Tammy Nuccio. Iowa Representative Brian Loesch. Indiana Representative Matt Lehman texted me. He's going to be running about 5 minutes late. Kentucky Representative Mike Meredith.
Here.
Kentucky Representative Michael Sarge Pollock. Kentucky Representative Rachel Roberts. Massachusetts Representative David LaBouffe.
Here.
Michigan Representative Brenda Carter. Minnesota Senator Paul Epke.
Here.
New York Assemblyman Jarek Gandolfo.
Here.
Ohio Senator Bob Hackett.
Here.
Oklahoma Representative Forrest Bennett.
Here.
Oklahoma Representative Mark Tedford. South Carolina Representative Carl Anderson. Utah Representative Jim Dunnigan.
Here.
West Virginia Delegate Steve Westfall.
Here.
And we do have Chair Jordan, of course. Non-committee members who have registered, Arkansas Representative Deborah Ferguson.
Here.
Florida Senator Victor Torres. Georgia Representative Matthew Gamble. Maine Representative Poppy Arford. Missouri Senator Angela Walton Mosley. Mississippi Senator Hillman Frazier. New York Senator Pam Helming. New York Assemblyman David Weprin. Tennessee Representative Elaine Davis.
Here.
Pennsylvania Representative David Zimmerman. I do see Kentucky Representative Roberts has joined us. Are there any other legislators present that I did not call? Okay, Mr. Chairman, I'll turn it back over to you.
All right. Well, with that in mind, I will entertain a motion to waive the quorum.
So moved. Second.
All right. All in favor of waiving the quorum?
Aye.
Opposed?
Aye.
All right. Thank you, guys. Again, good morning, good afternoon, depending on where you're located. I want to thank everybody for joining us today. I know everybody's busy, and I'm certainly appreciate your participation. As usual, the committee, we have a lot of business, so we're going to get right to it. We're going to begin with some new business, which is the discussion of some proposed amendments to the NCOIL Delivery Network Company Insurance Model Act. Then we'll continue with the Public Adjuster Professional Standards Reform Model Act and proposed amendments to the NCOIL Model State Uniform Building Code. There won't be any votes on any of these items discussed today. These interim meetings, as you guys are aware, are extremely helpful in us maintaining an open dialogue and ensuring that we're able to complete our agenda in an efficient timeline. One last thing before we get started. The latest version of the models that were distributed for the meeting are not necessarily what will be discussed or considered at our committee meeting in November. We're likely to make more changes between now and the time for the 30-day materials deadline, which I think is a few weeks away. And then we can also make changes between the deadline and the November meeting. So just remember the purpose of this meeting is again to continue to open dialogue and keep the ball rolling. So with that, we'll start with the discussion of the proposed amendments to the NCOIL Delivery Network Company Insurance Model Act. NCOIL adopted this model this past November. Somebody, could you mute your phone, please? I think there's some background noise there. But and we really don't like to reopen models for discussion so soon after adoption. But it's come to our attention that some clarifying amendments might need to be made, and you can review those amendments in the materials for this meeting. So we'll go ahead and we'll hear from the interested parties first. Any interested parties wishing to speak, please announce yourself and state who you're representing. But I'm going to start with Brad Nell, who led the interested persons discussion group on this model last year and has been initiating many of the discussions this time as well. So Brad, if you're on, the floor is yours.
Thank you, Mr. Chairman. As you identified, the model passed last year. It was run in a few states, and I think the stakeholders identified some possible changes to make to help the model move along in states better in upcoming sessions. And we've got what you've seen in the materials that were distributed were some suggested revisions that were circulated and generally agreed to. There are 3 areas for continued discussion, and that's where I think today's meeting could be particularly helpful. We can get a sense of direction from the stakeholders and the committee members on what direction you guys want to take, and hopefully prepare language to address everything for the November meeting. So the 3 areas for continued discussion are further refinement of a delivery available definition, a different approach to delivery service definition, and then whether or not to address independent contractor or worker classification issues in the model. So I'll just go over quickly in the material that you have, the amendments that you've seen. The really start on the second page, and I should say thank you to John Schnautz from NAMIC for doing most of the work in preparing the revised language. Much of this is pretty technical in nature. You can see it starts really on page 2 of the model with a technical correction of the placement of the word "and" at the top of that page, and then a drafting note that clarifies that the insurance requirements are intended to apply to vehicles that are required to carry insurance in your state. That is something that we know varies from state to state, how you define what a vehicle is and when it's required to carry insurance. And we're not trying to apply insurance requirements to something that's not otherwise required to be insured, like a bicycle or something like that. Then we get to the delivery available period definition, and the modification was made to make the insurance requirements applied to the period when a driver is eligible to receive work requests, thinking that the term eligible better captures the status of the driver under various business models used by the DNCs. And then under G and H on that same page, a technical change to better clarify that the location of the delivery may be different from the location of the customer who is placing the order. And the final technical correction is on page 5, where there's a change to a cross-reference that got messed up in the printing of the model. So these have been distributed. We've solicited additional feedback. I'm sorry, Mr. Chairman, did you have something? No, I don't have anything. You can go ahead. Okay. We solicited feedback. I think these are generally agreed on. We did get the suggestion for a further refinement of delivery available period that I think needs additional discussion. And it is, the suggestion was, instead of simply changing the definition to read eligible, that it be changed to read eligible and available. This was discussed among the stakeholders, but it's not yet been agreed to. And I can either stop there, Mr. Chairman, or pause there, or I can lay out the other areas for discussion for you.
You can go ahead and continue.
Okay. The second area for discussion is proposed change to the delivery service period. Keep in mind that we have the delivery companies operate using different delivery models, different business models, and that makes it a little trickier here. And some of the DNCs have suggested narrowing this delivery service period definition to limit the time when they're required to provide coverage, particularly among the DNCs that use scheduled delivery. They schedule folks for specific time periods as opposed to true on-demand delivery when someone just turns an app on and is looking for work that they've not already been assigned. So those DNCs don't want to cover the time when that driver is driving to their first pickup, as they view that more in line with commuting as opposed to work that they would insure. So suggestion was circulated but not agreed to for a bifurcated approach that separately defines on-demand DNCs from scheduled delivery DNCs. So that's an area for discussion, and I think we'll probably be able to hear from some of the stakeholders who have positions on that. And the third area is just whether or not to try to address the employment status, independent contractor status of drivers who sign up and work on the DNC platforms. So that, Mr. Chairman, that lays out the suggested changes in the material that was distributed and those additional areas for discussion.
All right, thank you. Do we have any other interested parties that wish to speak?
Hi, this is Jordan Bailey at DoorDash. Thank you, Chair, for the opportunity to talk a little bit more about the DNC model, and Brad for the comments on what's been discussed in the working group. Just wanted to share from our perspective, like, we are fine with the technical changes that are being proposed here and has been circulated as part of the materials. But really do hope that there can be a broader conversation about the delivery available period and some of our concerns that Brad mentioned. I think separate from the amendments that he directly mentioned, we have also had conversations with several members of this committee about some refinements to that definition to address our concerns around kind of the potential for fraud or folks just to leave the platform open and the challenges that create for our model with the insurance coverage during the delivery available period. So would love to work more on some potential guardrails to prevent kind of misuse of coverage during that period as it pertains to our model between now and potentially the annual meeting in November.
All right. Do we have any other interested parties?
Hi, Mr. Chair. My name is CJ Stolle. I'm a senior manager with public policy at Amazon. Want to say thank you to Brad for doing yeoman's work for trying to help us get through this process. I will say we are one of the different models where most of our deliveries are done in pre-scheduled blocks, where our delivery partners can select the date, time, and location that works best for them. And it is a little bit different than your typical on-demand drivers. So while we do believe that drivers should have access to insurance coverage that protects them, we do recognize that different models work very differently, and a one-size-fits-all approach won't work necessarily for this legislation. We have shared some language to close that potential technical gap that exists for models like ours that are schedule ahead. So we hope that we can continue to have this conversation and be able to clarify that the delivery available period is applicable to those orders that are truly on-demand services. Thanks.
All right. Anybody else?
Mr. Chairman, if you have time. This is John. Sorry.
No, go for it. How are you today?
Sorry. This is John Schnaus with NAMIC. Appreciate the shout out from Brad. Although I don't know that I want to take credit for all of this, but NAMIC has been engaged on this from the beginning, trying to work toward a model that everybody involved can support. I want to focus, I guess, on the couple issues that have been mentioned. On delivery available, we understand the concerns from some of the DNCs that you don't want to create a situation where somebody registers for a shift 3 days in advance and is covered by the DNC's coverage for the 3 days in between. I don't think that was ever the intention of delivery available. We are supportive of the change that some of the DNCs had suggested to go from the word available to the word eligible. We are also willing to vet with our members the idea of available and eligible. I guess we do want more of an understanding of what that adds that isn't already there in the term eligible, but we're open to that. The bigger conversation that I want to mention is what Brad alluded to on the delivery service period. This to us is going to be a more difficult issue to get a compromise on. So as we understand it, what some of the DNC providers want here is that the coverage, the primary coverage obligation would not be on them for someone going to a facility to pick up packages that they then deliver. And just to remind everybody the context of this model is specifically about people using their personal vehicles to make deliveries, which is generally a commercial activity. From our perspective, driving to a facility to pick up packages that I'm going to spend the rest of the day delivering is just as much commercial activity as actually delivering them. So we think that obligation ought to be there. More pointedly, if the model does not put that obligation on the DNC, there are already many private passenger auto policies that exclude coverage for that period. So unless we thread that needle with the model is expressly creating a coverage gap at that point, which we think would be a problem. All that said, we are very willing to continue working for something that accommodates everyone. I guess for us, though, that period in which you go to pick things up that you're then going to deliver is as much commercial activity as the rest of this, and we think appropriately ought to be covered through specific coverage that that individual needs, rather than put on every driver's private passenger auto coverage when they may in fact have no need or desire for it. So I'll stop there.
All right, thank you. All right, last call for interested parties. If not, then we'll move on to comments from legislators. So do we have any other interested parties wishing to speak? All right, if not, then we'll move on to any comments from legislators. Do we have any legislators wishing to speak?
I'll raise my hand if I can, Mr. Chairman. I don't know if you got your video on, but I'm raising my hand.
I got
if I can. So I want to address just really, I know there's a lot of issues out here, and I really appreciate where we're going with some of these discussions. I really want to address that, driving to the first pickup. I'm going to take you all the way back to when we did the TNC. The issue became, the reason we even got down this path was there was a gap. There was a gap between that standard insurance and when someone was in your car. And it was in that en route piece that we had to fill the gap. And we did that with the TNC. DNC ended up having the same gap. And so I think if we have some discussion of removing that en route, then we're right back to where we started, which is we're having a gap. So I think I look forward to the discussion. I agree 100%. We passed this in Indiana this past session. I know Amazon was at the table. I understand their concern and others like them, but I think it's two things. One is making sure no one's getting insurance 3 days in advance. At the same time, once I leave to pick up, my standard auto policy will cease to cover me, and we don't want to have that gap.
All right, thanks a lot. I think Rep. Bennett has a question or a comment.
Yeah, actually, that was Matt. Matt got my question. I'm also interested in the conversation around that. As a guy who used to do Postmates while I was campaigning the first time that I was running for office, some of those initial drives can be quite a ways. I live in the fourth largest city by landmass in the country, in Oklahoma City, and I'd turn my app on, and then my first job would be picking up something up in Edmond, which is 30 minutes away. But my view was, when I turned that app on, that was when I started work. So I mean, that's just an employee side of that or worker side of that, but that's kind of the part of the conversation I'm really interested in hearing about. Thanks for letting me talk.
No problem. All right. Do we have any other legislators?
This Senator Hackett from Ohio, and I realize it's a different scenario than the ride sharing problem, but we were able to solve the ride sharing problem. The problem a lot of times is the commercial auto is so expensive. And so how we solved the ride sharing thing was, we were able to go to the big insurance companies and have them create a endorsement or a rider that was very cost effective. And then they could look at what claims would come into play. And I think NCOIL, not Lyft, the other one, I think they decided they'll just cover the whole process. Because you're right, there was a gap in coverage. They covered the other part of the coverage, but they wanted the people to put the claims in on the personal auto when it was business activity. But the commercial auto didn't work. So I don't know if this is different. Do drivers have a commercial auto policy during this process, or is it very similar to the ride sharing issue that we got resolved? Anybody want to answer that?
Mr. Chairman, I can try to answer that if you'd like.
Go for it.
I think it's more analogous to the rideshare issue. It's personal auto policies, and then the companies are carrying commercial auto policies that cover drivers on a non-owned auto policy. So it's more analogous to that than and as opposed to drivers carrying their own commercial policy.
Okay. Because it's very, very expensive for the drivers to carry their own commercial auto. I think the model won't work. The model of delivery won't work if they have to have a commercial auto policy. Okay, thank you.
All right. Any other legislators? All right. Just one thing. I'm listening to this. I'm a little bit concerned because we did just recently pass this model. I thought it kind of appeared that this was going to be sort of like a cleanup, maybe just a technical cleanup. But as I listen, and maybe I'm misinterpreting what I'm hearing, but this almost seems like more substantive changes, almost like we want to relitigate the model. And I'm not sure that was necessarily the intent. Does somebody want to comment on that, or am I misinterpreting it, or am I hearing this correctly?
Mr. Chairman, I think the changes that have been circulated are more cleanup, more along the lines of cleanup. The areas for additional discussion that we've been having here are more substantive.
All right. Well, as long as please just keep that in mind as we move forward. If that's it and we don't have anybody else, I want to thank everybody on this. Again, we'll continue the discussion on the issue during the meeting in November. And please be sure to submit any thoughts or comments to me or to the NCOIL staff. Next on our agenda is the continued discussion on the NCOIL Public Adjuster Professional Standards Reform Model Act. And now I'll turn things over to the sponsor of the model, Representative Mike Meredith of Kentucky. Mike, are you there?
Can you hear me now, Chairman?
I can hear you now. I couldn't hear you initially.
All right. Sometimes our connectivity is not as good in rural Kentucky as we'd like it to be. We're trying to get there, but we appreciate the opportunity to be a part of this interim today and appreciate you, Mr. Chairman, for calling the meeting. We've had some ongoing conversations since the initial presentation on this back at our July meeting in Minneapolis, and some positive discussions. This bill that we brought before you is based on largely a bill that we passed in Kentucky or before the committee. And so just wanted to go through those a little bit. Certainly this is not our final product, but want to do everything we can to be prepared for moving forward at the November meeting when we're in Columbus. So just looking forward to a little bit more discussion today. So back to you, Mr. Chairman.
All right, no problem. Thank you. I now recognize co-sponsors of the model, Representative Lehman and Delegate Westfall. If they'd like to make any remarks, I'll start with Representative Lehman.
All right, thank you, Mr. Chairman. I do appreciate the work Representative Meredith has done on this. We passed similar legislation in Indiana last year, and I know I see Cole Klein on the call. Cole's in Indiana on that for that issue. It's an issue. I think the time is now to address this. It goes down really to kind of the making sure we don't get rid of an industry that can be that is needed in certain cases. At the same time, making sure we're dealing with those who have abused this situation. And I think there's evidence of that. So I appreciate Representative Meredith bringing this and look forward to the continued discussion.
Thank you, Representative Lehman. All right, Delegate Westfall.
Yes, sir. Thank you, Mr. Chairman. Matt kind of said the same thing I was going to say. I think we just need some safeguards on this, not trying to stop it in any type of business, but put some safeguards on it, some guidelines and stuff. I think we're getting there, and appreciate everybody what they're doing. So I look forward to see what we can do in November in Columbus.
All right, I'll turn it back over to Representative Meredith.
So I don't want to get too deep in the weeds on the things that we have talked about so far as changes there before you, but I do want to kind of outline them quickly. Most, I think, would be considered clarifying to the intent of what we were already working on. The first thing you'll see is we did add a few definitions in the beginning of the model, just a couple there, just to clarify what we're talking about through the entirety of the model. We also removed references to independent and staff adjusters. That was something that was really kind of conforming to our language in Kentucky, and we had agreed to remove that even prior to the meeting over at Minneapolis, and so we got those out for this latest version you're seeing. Down in section 4 on page 9, we removed the provision that permits a public adjuster to be compensated for services provided to an insured prior to the execution of a written contract in emergency circumstances. That was, again, something pretty specific to Kentucky. We have administrative regulations that dictate what those emergency situations are. And so we had heard from some folks from other states that it could be concerning if those guardrails along with those administrative regulations weren't there. And so we removed that section. Down in section 5 on pages 13 and 14, we added some provisions just dealing with requiring the public adjuster to use the terms of the insurance policy to resolve a claim. Again, that was just a clarifying. The policy is going to govern the claim anyway, but we just wanted to clarify that. And then prohibiting solicitation during the actual progress of a natural disaster and clarifying language with conflicts of interest and non-licensed public adjusters not being able to charge for the service if they are not licensed. Down in section 7, on page 16, we added some language regarding compensation and fee caps, and that's a drafting note just to clarify that if states have tighter compensation or fee caps, that we would not be suggesting raising those. Down in section 8 on page 19, we added language that clarifies that contracts for services entered into by an insured with a person who is in violation of the act is null and void. And I think that is the crux of the major changes. Before we hear feedback on the changes, I do want to note we did take into account the discussion and the information brought before us by the public adjusters at the July meeting. And I want to just outline a couple of the things that they raised at that meeting. Lowering the amount of the surety bond required for licensure. I see that as a consumer protection piece. certainly can continue to discuss that as well, but I saw it as a consumer protection piece of the legislation. Making optional the provision of the model that deals with pre-filing and approving contracts by the Department of Insurance or the insurance commissioner. Again, we know that we have a highly regulated industry in the Department of Insurance, and the Department of Insurance being able to review policies and rates on policies on the insurance side, and we thought it would be fair for them to be able to review those things on the adjuster side too. Making optional the provision of the model that prohibits public adjusters from acting as contractors or having a financial interest in a contractor. I think it's important with these contracts that the public understands that the public adjuster is working on behalf of the insured and not on behalf of some other conflict of interest that might be out there, whether that's a roofing contractor that they have a part in or whether they're a contractor themselves. And so I think it's imperative that we ensure that they're working on behalf of the insured and not somebody else in the progress of the claim. And then they also asked not to set forth fee caps, but rather leave that to the states. And I know NCOIL doesn't normally address fee caps in a lot of things that they do, but I find it very important in this model. And I suggest strongly that we keep language in there with the fee caps. And I say that simply because any amount of money that comes out of that claim is money that the insured will not have to be able to do repairs that are needed to their home or auto in this situation. And so I think it's very, very important that we understand and don't have some large amount of compensation coming out of that, because that's just going to be a shortfall that they're either going to have to dip into a huge amount of their savings or go borrow money to finish that. And at that point, I'll turn it over to you again, Mr. Chairman. I think that summarizes what we have accepted in changes and what we have heard from and have not made changes on.
All right. Thank you for that, Representative Meredith. We're going to open it up now to interested parties. Do we have any interested parties wishing to speak?
Yes, should I just jump in? Hello?
Yeah, go ahead.
Yes, I'm here. You can.
Okay,
Go
if
ahead.
the sound was cutting out for a moment. I'm also in an area where there's a storm going on, so I apologize if we lose audio. We have 50-mile-an-hour winds outside my door right now. I'm Holly Soffer. I'm the counsel for the American Association for Public Insurance Adjusters, and I'll keep it really brief. Senator Meredith, I completely understand where your concerns. You did a great job summarizing our concerns, and I understand where you're coming from with the fees. But we still believe that the fee cap should be optional, because especially with small claims, we understand that whatever portion is paid to the public adjuster comes out of the eventual recovery, and the homeowner in that scenario would have less money to make the repairs. But if you look at all the information we provided in the statistics, which our president here, Cole Klein, can elaborate on, those funds wouldn't be available at all but for the public adjuster. On many of these cases, the original offer and even final offer from the carrier was so much lower than the amount that the public adjuster was able to obtain when they used their expertise to present the damage, that the homeowner is so much farther ahead, it more than pays for the public adjuster. So that we still feel that sometimes with the cap of 15% on those smaller losses, it deprives the homeowner of any professional representation, because the public adjusters can't afford to do those smaller claims. And then some claims are sometimes undervalued by that small amount of money. And that's where I just wanted to make sure that it's clarified. And regardless of what the number is for the fee cap, I know that back in Kentucky, there's the Department of Insurance has recently put out an advisory bulletin that the cap on fees only applies to funds received after date of contract. And I just wanted to make sure that the language in this bill is very clear on if there is to be a cap, where the cap would apply. In other words, is it like states that already have fee caps, like Texas and others, where it's the public adjusters can charge a higher amount on what's called like an over and above, but not to exceed X% of the total amount? Or is that cap on the over and above, which it seems to be interpreted as being in Kentucky, which has, of course, the same language, but it can be interpreted in different ways when it's not clear. So I just wanted, and we can send some emails out with some suggestions on that. And then with regard to the contract approval, we understand the concern, but sometimes when the states have to approve contracts, they don't have the time to do it, and it can create very long delays. So if we have to have contract approval, maybe we can have some timeframes in there that a contract has to be approved within X amount of days, because I know in California and Ohio and states that are understaffed and overworked, it can take up to 2 months to approve a public adjuster contract. So it's a real disadvantage to people trying to move from state to state or get a license in a certain state if it's going to take them more than 2 months to get their contract approved. And I know that Kentucky has recently addressed this. They're drafting a regulation with some timeframes in there. But without those timeframes and requiring contract approval, I think that it could create problems. Anyway, I'm going to pass it on to some of our others on the call. Tony DiUlio, if he's still on here. I don't see your picture, Tony. But
I'm
Tony,
still here.
their attorney with Appia. There he is.
Thank you so much, everybody. I'm sorry. Oh, I thought somebody was saying something. Thank you so much to everyone, Senator Meredith, for putting this together, and Mr. Chairperson for allowing us an opportunity to talk. To some of the other issues that were brought up was the financial interest with contractors, public adjusters. One of the things I think we can all agree with is we want to make sure that the people who are assisting homeowners in claims are licensed professionals. There are states that have, in essence, made their entire model public adjusters who work with contractors. And I would simply suggest that a disclosure might be able to do that trick as well, rather than prohibiting it in its entirety. I completely agree with you, Senator Meredith, that we don't want there to be any confusion as to the conflicts or who's working for who, but restricting a person as to what types of income they can have through multiple areas of business could also be resolved through a disclosure so the property owner can just make that informed decision. If they want to try and streamline the process through a public adjuster who works with a contractor, as long as that disclosure is made and is clear, that should, I think, resolve everybody's concerns, while also leaving options for the property owner to kind of make it a one-stop shop when it comes to their claim. Again, I think all of us agree that the main goal here is protecting the insureds, right? We all want to make sure that they are in a position to be able to best repair their property, and which I want to do hit on that fee cap issue as well. The language that was added in as a clarification, while it indicates that it's not intended to increase caps for other states, it doesn't make any indication from the states that have higher fee caps in place, like Georgia, where it's 1/3, that there's no intent that they reduce their fee cap either. Again, this comes down to our position earlier, where it really should be left up to the individual states, because when you've got an insured with a $10,000 worth of damage, and a carrier comes out and says, we're only giving you $1,000, you reach the same exact conclusion that you're concerned about with the public adjuster, in that they don't have enough money to do the job. And if they don't have enough money to do the job, they need a professional to step in. And a public adjuster can do that, but they can't if it's a $10,000 loss and there's $9,000 on the table if there's a fee cap like this. So we are simply asking that we protect those insureds, because they make up the mass majority of insurance claims across this country. Over 90, I think it's 92% of claims are around $22,000 or less. So you're in essence telling all of those people, if they're shortchanged by their carrier, or if their carrier just makes a mistake, right? I don't know, the carriers aren't all bad guys. They just miss things sometimes, right? We're all human beings. If they miss that and they need a professional to come in and fix that, they're going to be left without an option if this were to be accepted. So we want to simply address that problem so that those people who make up the mass majority of insureds with claims can get that assistance. Again, I thank you so much for your time, and I would love to hear any questions about this or concerns. when it comes to addressing these people who have the lower value claims, kind of what the hope is with this bill to be able to still help them.
My name's Cole. Oh, sorry. My name's Cole Klein. I am president of the American Association of Public Insurance Adjusters. And just one valuable piece of information I wanted to add. We did a study of 129 claims in 2022. And of those residential roof claims, it took on average 377 days to from the time the public adjuster was contacted to reach a settlement on those claims. So just a significant amount of time, especially for these, as Holly called them, smaller but average size claims. It just takes a substantial amount of time, effort, and work on part of the public adjuster to help these policyholders.
All right, we have any other comments from any interested parties?
I do. This is Eric DeCampos from the National Insurance Crime Bureau.
You can continue.
Thank you, Mr. Chairman. I just wanted to go back to a comment that was made regarding inputting disclaimers for any conflict of interest. From NICB's perspective, we do have some concerns with this idea, just because from an insurance fraud investigation standpoint, we have seen cases where disclaimers can easily be hidden or obscured when individuals are signing contracts. So I think there would need to be a deeper discussion on that idea regarding fleshing out how exactly that can be implemented and what guardrails can be put in place to ensure that a consumer is not only educated, but is fully aware that there is this interest that does exist between a public adjuster and a contractor. I'm happy to take part in those conversations with anybody who's interested in that, but did want to express our concerns with this idea.
All right.
May I just follow that up in 1 minute?
1 minute.
Yeah, thank you. Yes, we would certainly love to work with you on those disclaimers, because there are situations where in some states where the business model is for the contractor to actually hire the public adjuster to help them, because we don't want contractors adjusting claims because they don't have a license. So we want the two parties to be able to work together where there's no common financial ownership or interest. One is just hiring the other or referring the claim to the other. So we can certainly work with any appropriate disclosure on that. Thank you.
All right. Do we have any other interested parties?
Chairman, if I could very briefly.
Go for it.
Thank you. John Schnauz with NAMIC. I'll keep this very short. First of all, thank you to Representative Meredith. We think the changes that were incorporated into the model are improvements. I also want to add many of those changes are closely modeled on the Texas statute, which has been in effect more or less for 20 years. I do want to clarify, Texas does have a written contract requirement on a form approved by the commissioner and a 10% across the board fee cap. None of those issues have restricted the public adjusters from operating in this state. We have a very robust market for them, and I would just encourage the committee and NCOIL to keep the model strong. Thank you.
May I have 30 seconds to follow up on just that?
30 seconds.
Just want to make sure it's clear. It's not that we're concerned about the public adjusters being able to stay in business. We're concerned about the insureds who have these smaller claims and can't get assistance. So I want to make sure that it's clear. This isn't just about protecting a public adjuster's right to a free and open market, but about protecting insureds who will be limited in what they can do if a cap like that were put across the board on all claims.
All right. All right. Do we have any other interested parties? If not, we'll go on to comments from legislators. Any legislators? All right. If there are no legislators, I'll just follow up briefly. I know we had this issue in Louisiana, and when it comes to charging a percentage, we certainly don't allow it. We consider that engaging in an unauthorized practice of law. our Supreme Court looks at it the same way. I can't speak for what other states would want to do. I can tell you in Louisiana, that'd be something that would be very difficult to get passed, and it would receive lots of opposition. But we do want to keep the model strong, and so I hope that we can continue our discussions with it. All right, we'll move on to the last item on our agenda, and that's the continued. I'm sorry, somebody else had something? All right, we'll move to the last item, which is discussion on proposed amendments of the NCOIL Model State Uniform Building Code. And with that, I'll turn things over to Representative Jim Dunnigan of Utah.
Thank you, Mr. Chairman. It's good to be with you today. Since the committee met in July, I've been able to have some very valuable discussions on this issue. And I'm glad to work on these amendments, which generally speaking, where we started out kind of was to incentivize homeowners and renters to take steps to strengthen their residences from natural disasters by providing them with insurance discounts if certain standards were met. In my home state of Utah, we've been dealing with some very horrific wildfires, along with much of the western United States. So I'm really interested to see if we can find a public policy that ultimately strengthens homes and neighborhoods. However, in the discussions with various stakeholders I've had since introducing these amendments, I'm not convinced that what I've been working on is really going to move the needle, so to speak. You know, if a person's homeowner policy is $3,000 and they get a 10% discount of $300, let's say, that's unlikely to motivate them to redo their roof and put a more fire resistance roof on it. I'm told that Oklahoma has had a similar type of law where they provide a discount on insurance since 2018, and the take-up rate has been very minimal. I would encourage you to look at the chat feature here on Zoom that talks about the destruction of the homes in Hawaii as a result of the wildfires. You've probably heard of the wildfires that took place on Maui.
And look, you guys, if you would please mute your phone if you're not speaking.
So talking a little bit about the wildfires that took place on Maui at Lahaina town, I was actually in Hawaii when that happened. And I found it very interesting. If you can take a minute and look at the image or the photo, all the houses there and the structures were completely torched, except for one that came through virtually unscathed, a little bit of smolder on one wall. And the reason is, as part of a restoration, the homeowner or the building owner had put on a metal roof and cleared away all the shrubs immediately adjacent to the building and then put in some pavers. He didn't do it to fireproof it. He did it to remove the vegetation to keep termites away, but it protected him. I mean, it's a stark contrast showing what can be done if people move vegetation away and have a more fire resistant roof. I want to invite suggestions. I've had several given to me about what can we do that would actually move the needle. And so I'm interested and I'm open to other policy choices that this organization could endorse and support. I've heard of promising things done in Alabama and Louisiana, some grants. And so I want to keep working on this, but I want to shift the direction a little bit and try to find something that will actually end up with a product that will be worthwhile. That's all I have, Mr. Chairman.
All right. Thank you, Representative Dunnigan, for that. Before we open this up to discussion, I do want to tell you a little bit, since you mentioned it, in Louisiana, what we are doing, and we're following the model in Alabama, because in speaking with them, it was difficult to get people to participate into a program or upgrading their roofs to a fortified roof without some type of grant. So what we've done this last session, we set aside $30 million for $10,000 grants, and that program actually application opens up on October 2nd. And so we've been advertising it. So we hope it's going to be very successful. I can tell you in Alabama, they've been doing it for a while. And once they started offering the grants, there was a significant uptake in that. So So I'm hoping that, if you guys want to look at something like that, I think it'll be very beneficial to you. So with that being said, we can open it up to any interested parties. Do you have any interested parties who want to speak?
Mr. Chairman, if I may, Matt Overturf with NAMIC.
Absolutely, go for it.
Thanks, sir. Appreciate Representative Dunnigan's comments. I know we've had several conversations, or you and John Schnauts from NAMIC, on this issue since July. And so we've been working through coming up with some alternative ideas. You've hit on a couple of those, but I'll just kind of go through our list and look forward to continuing to work with you on some language around some of these ideas. So in no particular order, obviously the readoption of the building code model, but also looking for ways to improve and strengthen building code requirements would be one. Funding mechanisms such as grants for mitigation efforts, which the chair and you just touched on, is something that we find would be successful. In addition to that, state tax incentives is another one that has come up that has really incentivized folks to take on some of these efforts. And another one that's out there, catastrophe savings accounts is another one. I know there's been some effort at the federal level, but like most things at the federal level, it moves pretty slow. So that could be something that we could look at on this end. In addition, potentially maybe outside of this model, but an NCOIL resolution that would support changes to FEMA's BRIC program. So NAMIC joined 50 other organizations at the end of August and sent a letter to FEMA outlining some changes that they could make to the BRIC program to make it more accessible to states and communities across the country. So that could be something there as well. And then finally, just, if discounts is something that is going to continue to be part of the conversation, doing those in a voluntary manner. But we find it important to include, anti-rebating safe harbor with that piece that would not only cover discounts, but other services and resources that insurers may offer to their policyholders for disaster mitigation. And in that line, there may also be an opportunity to have a conversation around a transparency component with that as to what insurers offer to mitigate against disasters. So a quick rundown of a list of some things, and look forward to continuing the conversation with you around any or all of those.
Thank you for those comments. Do we have any other interested parties?
Yes, hi. Hi, Chairman. My name is Amy Bach with United Policyholders. If I may contribute to this conversation, this important conversation, thank you. So my organization is a national 501c3 insurance education and advocacy for policyholders group. And we've had the pleasure to be at quite a few NCOIL meetings over the years. And I just want to share, we're based in California, so we know a lot about what's been going on here in the wildfire context, and trying to speed up wildfire risk reduction and get us closer to where the hurricane-prone states have been, the states that have very robust fortified home programs, catastrophe savings accounts, all that sort of thing. But we also keep an eye nationally, and I was at a conference last week in DC, where a lot of these conversations, similar conversations were going on, and I'm also part of the NEIC. I'm part of their consumer rep program. So all these conversations, I would recommend that we look at Alabama, and see what they've been doing. I think people, certainly at the conference last week, there were rear insurers there, environmental groups, public officials from the state and the feds, and everyone seemed to kind of think that Alabama is a shining example of how to do things right in terms of funding risk reduction, and having insurers incentivize risk reduction and reward it. And I know there's a tension between mandating that insurers give a specific discount that insurers may feel isn't necessarily warranted by the data. At the same time, what I have heard in a lot of conversations in other forums is that states that didn't mandate a discount and just left it to the insurers wish they had, because it's just a much slower adoption. And I think we all feel the pressure, those of us who are concerned about the health of the, property and casualty ecosystem, feel like it's really imperative that we figure out how to give property owners as much help, as much clarity on what's effective in risk reduction, and as much rewards as we can in the insurance context. So I appreciate your time and happy to answer any questions.
Thank you for your comments. Hope to see you next week.
Yes, Rep. Jordan, nice to hear your voice, and appreciate your work. I know Louisiana. I remember Commissioner Donlin saying, we did all this work to fortify our levees, after Katrina, and the insurers are still kind of going, and so that was like an early, I get it. Insurers like to see a lot of data on the efficacy of risk reduction before they will have their rates and their underwriting, reflect the reduced risk. But obviously, we've got to keep moving forward here.
All right, thanks. All right. Do we have any other interested reporters? All right. If we don't, I'll move on to legislators. Do we have any comments from legislators? All right. If we don't, again, look, Alabama is the model. I would also tell or suggest, for you guys to go to the Insurance Institute for Business and Home Safety, their website. They're out of South Carolina. They do a lot of this research in this area. And in fact, Alabama and Louisiana, we both relied on them heavily for some of the research that they've done in this area. So I would tell you to take a look at the great work that they've done as well. All right. With that, do we have any other business before the committee?
Mr. Chairman, can I bring up a potential issue as we move forward?
Absolutely.
Yeah. So, and I apologize, my camera's not working, so this is Representative Lehman still. But I have an issue around. I brought an issue forward in Indiana last session regarding litigation funding. If you're familiar with this process, a third party will fund a lawsuit, to support the plaintiff, and then they'll exchange that for the return on their investment in the time of settlement. That has been around for some time. And it was a very, I would say it was kind of a small industry, helping people get through, paying their mortgage and some food money, etc. It's turned into really now much more larger industry, and you're seeing it come into private equity is entering this, and foreign money's coming in. And I was on a panel during our summer NCOIL meeting in Minneapolis. I went up to my room and I got on a panel and started talking about how are we going to get our kind of hands around this. It's becoming a national issue, especially in the area of these kind of nuclear verdicts now that are coming out. And so I do think it's time, because of this kind of interest on a national scale. I think it's time for NCOIL to kind of re-engage and be a part of this. I've never had the intent of prohibiting this practice. I think we just have to put some pretty strong parameters around it. So we had this issue a couple of years ago, as some of you may recall. We never got a lot of traction. I don't think it was as big an issue maybe then as it has become today. But with the issue as it's progressed, I think we need to get back involved. I've relayed this interest to the NCOIL staff. We've put it on as a general session in November here in Columbus. But I think I want that to kind of be maybe a jumping off point to develop a model law that I want to sponsor, leading to discussion next year. Like I said, we did pass some of this in Indiana this year. Didn't go probably as far as I would have liked, but we're starting to have that discussion. So anyway, look forward to working with anybody on that. And anyone who has interest can reach out to me or the NCOIL staff. And with that, Mr. Chairman, I'll turn it back over to you.
Thank you, Representative Lehman. All right. Do we have any other business before the committee at this time? All right. If we are hearing that we have no further business, I'll ask for a motion to adjourn.
Kudos on your time management, Mr. Chairman. Very well done.
Well, I appreciate it. So do we have the motion in a second?
So moved.
Right. Second.
Second.
Third.
All right. All in favor?
Aye.
Aye.
Opposed? All right. This meeting is adjourned. Thank you all for your time.
Thanks, everybody.
Appreciate it.